You guys know I freaking hate Netflix. Of any of like the big FANG or big corporations in tech, I hate Netflix the most. Number one, because the whole landscape of streaming in the past 5 years has completely changed. Every company has their own streaming platforms now, which means not only is there a ton more competition, there's less content on Netflix itself. Netflix makes great Netflix originals, which is awesome, but the amount of money that they have to spend as a production house now in order to do that is just not worth it. And the multiples that this thing has been trading at for the past couple of years is absolutely insane. The thing that we were trading at $700 back in November, and now we're trading at $265. That's pretty crazy to see one of the biggest, not now, but part of the FANG drop 62%. But it's for the same reasons like I've said before. The amount that they can continue to grow is really, really small, especially in the United States. Basically, United States, Canada, North America, they're pretty much maxed out. And we're going to go over this quick little thing here, going over their earnings, but down 23% after the company reports its loss of subscribers for the first time in 10 years. Which is not good. Subscriber numbers is really what you're looking for when you're looking at tech like this. You're looking for daily active users, subscribers, and you're also looking for like average revenue per subscriber, which is not going to make a difference in something like this. But when you're looking at social media, it does. Shares of Netflix have cratered 23% on Tuesday as the company has reported a $200,000 or 200,000 subscriber loss during their first quarter. It's the first time the streamers have reported a subscriber loss in more than a decade. The company said it also expects losses to continue. So you guys know that really looking at, and this is actually a really good example I want to talk about here, but a lot of people sometimes when a stock drops, like right now, they'll look and be like, oh, EPS beat, so why is the stock down? Well, number one, they lost subscribers, which is massive, but outlook is really, really bad. So they're still expecting more losses to happen in the next quarter. Forecasting a global paid subscriber loss of 2 million for the second quarter. So 200,000 is what they lost in the first quarter. They're expecting 10 times that in the second quarter, which is 2 million. Key numbers, 353 versus 289. So they beat on the top line. Revenue is 7.7 billion versus 7.9. They missed on revenue. Global paid subscriber additions, there are no additions, a loss of 200,000 versus compared with the 2.73 million ads that they had expected. So that is atrocious. That is atrocious. Netflix previously told shareholders they expected a 2.5 million net subscriber during first quarter, and now have predicted that number to be closer to 2.7, and now it's a loss. So not good at all. I would not be touching this. I would not be touching this falling knife. If we look at where we're trading currently right now, you can see on here where it says post, that's where we're trading right now. We're trading around 260. 260 on this weekly chart is a major support from 2018, 2019, and around like the end of 2019 was the last time we used this as a support. I would be very, very careful trying to buy this. Not only is a loss of 200,000 subscribers bad, as an expected loss of 2 million subscribers next quarter is really not good. And you have to remember that just because a stock is down and beaten to shit doesn't mean that it has to bounce. Doesn't mean that it has to recover. I'm not touching Netflix. I wouldn't recommend touching Netflix. I think that if we snap through this support, we will see Netflix back down at $133. And maybe from there, I will decide if it's something I want to look at, if it's something I want to be potentially interested in buying. But for right now, not touching Netflix.